Are you a landlord or investor looking to sell your property? In this video, we're going to share with you the 5 tips on saving money on capital gain tax. Coming up. Hi, this is Kai with the Kai Wong Team, helping you better understand everything you need to know about New York City real estate. Today, I have the pleasure of introducing you to Tim Allomong from Allomong Associates. How are you doing today, Tim?
Good, thank you for having me.
Thank you for being here.
Sure.
Tell us a little bit about yourself.
Sure, I am a New York City real estate attorney. I mostly handle purchases and sales of real estate here. That includes co-ops, condos, single multifamily homes, and buildings.
Great. So one of the topics that we get from investors and landlords is, I'm paying a lot of money on taxes when I'm selling the property. What can they do? So I wanted to talk to you about what options they have.
Of course. So my first thing that I'd like to tell you all is basically what is a 1031 exchange, right? So a 1031 exchange, broadly stated, is a swap of investment property. So you're selling off one and using the funds to purchase a new one. By doing so, if you follow all the correct rules and the IRS regulations, statutes, then you can effectively defer 100% of your capital gains tax.
Yeah, that's something that a lot of the first-time sellers, they're not aware of, especially for investors and landlords. When that money you can transfer it to another property to purchase later on as well. All right, so what's tip number 2?
Number 2 is a lot of people are asking me right now if Trump's tax plan has significantly altered the 1031 landscape, and I tell them no, not with respect to real estate investors. So formerly, before the tax code was redrafted, the 1031 exchange also applied to personal property, as long as it was used in a trade or business. People who had private aircrafts or construction equipment that they used as part of their business were able to do a 1031 exchange so they can get new equipment. That was all deleted from our new tax bill. So right now, all we are applying 1031 exchange to is real property.
Okay, so as long as it's an investment property, they're still able to benefit from the 1031 exchange.
Absolutely, as long as it's real estate. It could be empty real estate, it could be fully developed, as long as it's real estate.
Okay, and that's anything from a condo to a multifamily or any type of property, essentially.
Right, you can exchange a condo unit in Manhattan for a sprawling 100-acre farm in Kansas. It's still like-kind property.
That's the dream. That's the dream. What's tip number 3?
Number 3 is, do you ever pay the tax, right? So I always am cautious to tell people that we are deferring the tax in a 1031. We're not escaping it or avoiding it. Once you go to sell your real estate for cash, that's when you'll be subject to the tax.
For a 1031 exchange, you can keep deferring from property to property, right? So when you finally realize it and pay the capital gain tax, a question that I get asked all the time is, do I have to pay it from all the way from the first property all the way to now?
You do. It's from day one.
Wow.
The only way to go around that is if you were to have beneficiaries once you pass away, then your beneficiaries in your estate transfer documents will have what's called a step-up in basis.
Okay.
And that's the only way for your heirs and beneficiaries to sort of slide into a fair market value at the time of your death. So their basis is not going to be from when you originally purchased the property.
Got it, so that they don't end up with a really, really big tax bill.
Right.
Got it, okay, that's a great tip. What's tip number 4?
Number 4 is, how do you set up a 1031 exchange? Okay, so it's really a matter of informing your real estate attorney that you intend to do a 1031 exchange with the sale of your property as soon as possible, preferably before you go into contract, so that way we can get something in there to require the purchaser to cooperate with us in the 1031 exchange process, as long as you're telling your attorney right before the closing. It doesn't take too long to set it up. It just has to be done before we get to the closing table on the sale.
Got it. And what's tip number 5?
Tip number 5 is know your timeline. Okay, so once you sell your investment property, and you're planning on reinvesting into a new one, the day that you sell your property is the day that you have two very important deadlines.
Okay.
The first deadline is 45 days to identify potential replacement property. So you have to tell your attorney or qualified intermediary that you intend to purchase one or some of this list of properties, okay? Most people identify 3.
Okay.
The next deadline, which also starts from the day that you sell your property, is 6-month deadline. That 6 months is the time that you have to purchase one of those identified properties, or all of them, but you have to wrap it up within the 6 months. The only time they'll extend the 180 days to close is for national tragedies.
Okay. So walk me through. So, you know, a seller selling their property, what happens to the funds when they're selling it, and what happens to it, you know, when they're buying the next property?
Sure. So when you go to sell your relinquished property, at the closing for your sale, you'll put all of your sale proceeds into the hands of a 1031 exchange qualified intermediary. That is a company that is set up for holding your funds, escrow funds more or less, and they will release your funds to you back when you need them for your subsequent purchase.
When you close, as long as the money doesn't go into the seller's account, then there's no taxable events.
One example I'll give you is that a seller takes the funds, puts them into his bank account or even his attorney's IOLA account. As soon as he does that, the IRS sees it as a taxable event.
I've seen that as well, that the sellers come and ask and say, hey, I want to do a 1031 exchange right after the closing, which it's too late at that time.
It's the worst phone call to have.
Yeah. All right. Well, thank you so much for the 5 tips. It's really helpful. Any other last words you want to leave the viewer with?
One thing I would tell people who are contemplating a 1031 exchange is to think about the lineup of when you're going to sell versus when you're going to purchase, because you can go into contract for your sale and you could kind of push it back until you've really got a good idea on the replacement property on the back end of your exchange. So that way you're not having problems with the 45 days and the 180 days.
So just kind of pre-planning beforehand just to make sure you meet the deadlines.
Absolutely.
Perfect. Well, thank you so much for being here today, Tim.
Thank you for having me.
Thank you so much for watching this video. Hope you found it informative. If you want us to discuss a different topic for a future video, please leave in the comment below. And if you're new here, consider subscribing. On this channel, we share with you buying, selling tips, market updates, and neighborhood guides. So we hope to see you in the next video. Bye.